Oh, you are thinking, sure, but I am building equity with every payment, right? And this is where I have to show you the least popular chart in personal finance. Over 30 years, you will pay $443,000 in interest on a $386,000 loan. You pay 115% of the house's price to the bank on top of the house's price for the privilege of not paying it today. And it is front-loaded. In your first 10 years of payments, roughly 81% of every dollar goes to interest. After a decade of never missing a payment, you will have knocked about $57,000 off the balance. 10 years, $57,000 of progress. That is not a wealth-building machine. That is a very slow subscription service with a lawn. And no, the mortgage interest deduction does not save you. It is the most confidently cited benefit almost nobody actually receives. After the 2017 tax law nearly doubled the standard deduction, the share of filers who itemize collapsed from 31% to under 10%. You take the standard deduction like everyone else, which means your deduction is worth precisely nothing. It is a benefit that exists mainly at barbecues. So now let's be equally hard on Aubrey because her side has a catch that is honestly bigger than yours. Remember, she is 4 blocks from Jeremiah's front door. She rents the comparable house for $2,150 a month. She pays about $200 a year for renter's insurance and $0 for the water heater that dies in February. When her roof leaks, she makes a phone call. You make a decision. But renting only wins if Aubrey does the boring thing, and this is the entire ballgame. She has to take the $96,500 she did not spend, plus the closing costs she did not pay, plus the $1,079 monthly gap between her rent and your true cost, and put every bit of it into index funds, every month, forever, without touching it. Most renters do not do this. They spend the difference. And if Aubrey spends it, this whole video collapses and you win by a mile. Because your mortgage forces you to save whether you feel like it or not. Amortization does not care about your mood. That is the strongest argument for buying that exists, and it has nothing to do with real estate. A mortgage is just a savings account that yells at you. So let's assume Aubrey is disciplined. 7% returns, 3% appreciation, 3% rent growth, 7% to sell. Hold on to those assumptions, because a woman named Nadine in Cleveland is going to break every one of them later. Year 3. Jeremiah's old house, now yours, is worth $527,000, which feels fantastic right up until you subtract the mortgage balance and the cost of selling. Your actual net position is about $121,000. Aubrey's portfolio is about $162,000. She is up $41,000 on you. Year 10. You have replaced a water heater, a roof, and most of your weekends. You are at $292,000. Aubrey sits at $345,000. The gap is $53,000. 7 more years of your life, and that gap moved $6,000. Which tells you something important. This is not a blowout. It is a tie game being decided by assumptions, and I am about to change one. But numbers on a screen are not what this decision actually feels like, so let me put it in the terms you will really experience it in. Being $1,079 off on your monthly cost does not look like a spreadsheet error. It looks like getting the HVAC quote on a Tuesday and quietly canceling the trip you promised your kid in March. It looks like a roof estimate for $11,000 and the words, "We will figure it out," said out loud to nobody. It looks like standing in your own driveway doing math about whether the water heater can survive one more winter. It looks like being one broken thing away from your emergency fund every month for 11 years. And Aubrey's version is not free either. Hers looks like a landlord who will not replace the dishwasher. It looks like painting a wall she does not own. It looks like an email in February with the subject line lease renewal and the 60 seconds before she opens it. It looks like being told, very politely, that her rent is going up $200 because the market says so, and there being no version of this where she gets to say no. Neither of them is comfortable. They are just uncomfortable in different currencies. But first, your phone rings. Year 6. A job offer in another state, $20,000 more a year. Aubrey gives